So we just had this dip right here, and a lot of times it happens so quick you can't react, and a lot of times you can't tell what's going to happen afterwards. But this move here. Actually, I seek out. I probably trade it 8 times a day. It's one of my top 2 most profitable trade setups. This right here, taking advantage of this, and it's pretty much shorting or longing into resistance or support. So I'll be shorting into support, which is a big no-no to most people, and I'll be longing into the pico top of resistance. So, which is a no-no many people, but it's every single movement is a way to make money off of it. But anyway, so these movements I know very, very, very well, and they're quick, they're fast, and I definitely want to be telling you about it. Okay, I've studied this movement for about 6 years now. This exact type of movement, and what is happening here? Well, this is Bitcoin, Solana. Ethereum did this just the other day, and really they do it. They do it several times a day, probably 6 times a day. So, and I'm on the 5 minute. You can see it on the 1 minute too, but this is just so much clearer. So, first of all, I'm just going to kind of break it down. You can see here that this is a very classic move. Like I said, pretty much they dive into um, down with displacement, and then what this is repricing the leg. And you see this movement has been the end of a fairly long cascade down from the highs of 117,888. This was today. So, but they're repricing the leg is essentially what they're doing, and there's sell side liquidity down here, and it gets rated, and that's exactly what they did right here. So they raid the sell side liquidity. You can see it on the lower time frame, but right here, sell side liquidity there, and then once they are able to do that, that's when they simply reverse. See, when they're bringing the price down with such displacement, retail's just piling in with shorts, and that's exactly what they want. Late shorts start piling in because they FOMO, and it's a trap. Smart money, they already have sold higher. People think that this price is going to continue, but guess what? Smart money is already sold. They're already off. This is just retail. Smart money brought down the price here, bought shorts, brought down the price up, bought more shorts, and this was the result. And what does retail do? They buy here, and they get trapped by that. That's the whole entire purpose. And see, what smart money is doing that is they're not selling into this low. Retail selling into this low, and you'll notice this is the key thing. This is one of the key things. You see how quickly it goes down like that, how slowly it goes down up like that, and you can see the fair value gaps left right here. Fair value gap right here. Okay, that's key. Smart money does that on purpose. Why do they do that? They do that so they can retrace, and they can get essentially what is called momentum, and they can retrace back into it, and then refuel, rebalance these, and then shoot off. They spring off from it. Okay, so that's one way we know it is smart money doing this, because price does not naturally do this. This is manipulation, and then it naturally comes back up. Okay, and the other thing is you watch how it comes out slower than it comes down. If it was more natural, we'll say, it would have rejected. Boom, boom, it would have rejected. So if we see a rejection, literally, the rejection, it should even be more than the descent into the movement. And this happens at the top and the bottom. It should be like boom, boom. It should be direct. There should be it should be displacement. Like here, there should be displacement there, and there should be more of a point. It might do a swing fair pattern a couple times, but the point is that it's supposed to be a rejection from there. This is not a rejection. This is engineered liquidity. This is engineered right here. It's a trap. Okay, so it's trapping sellers to provide the buy side liquidity. Okay, so that then they can sell again, because they run out of steam with all these, and they give it a shot. This is just their playbook. They trap retail down here. They come up. Buy side liquidity is built. Why is buy side liquidity built up? Because the shorts put their stop losses up here. They think they're safe. Well, guess what? They're about to come up here and tap them. Doop, 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 and then drop the price. Once the buy side up here, once the buy side is taken out, which are the stops from the shorts. So it really makes the retracing back. And so these imbalances here makes the retracing back into here so much easier. And then because the highs here, it makes it so much easier for them to come down. You got to grab liquidity up to go down, and if it doesn't go back down, if it doesn't go back above this displacement high, so it doesn't go above here. So right here, this line right here, it's still going to deliver lower. So that's one key is you don't want it to go above this region here. So really like a higher time frame breaker structure, you don't really want it to go, you don't want it to go up there because then it's not going, most likely it's not going to come down. It's, yeah, but you can tell the volume. Usually what happens here, the volume's high and then up here, volume's high right here, but then it drops. You'll see just volume going down. Volume goes down as price is going up. That means that it's losing steam. It's not. It's just a retrace. It's coming back down. Don't worry. That's what that means. You just got to be patient. And I mean, thing is, this slow grind, boom, 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 compared to that. Okay, that's just inducement, is what we call it, inducement. So instead of displacement, it's or distribution or accumulation, it's inducement, and that's fuel for the next leg down. So that's all they're doing is refilling right here. See, refilling. That's all they're doing, taking out highs and lows, creating liquidity above and below. They're going to take out the high and then take out the low and keep going. So to put it in a little bit more layman's terms, put it a little more layman's terms. I mean, there were people that retailers. Okay, so the big move was down. Retailers, what they did is they bought short. Okay, so when they bought short late. Why? Because they FOMO. This created FOMO. They know it. The smart money knows it. So they're basically chasing after a bus, we could say. Okay, that's already left the station. And smart money, what is it doing? It is smart money sold the tickets to them. Okay, up here they sold the tickets to them. Okay, and smart money, they aren't getting on the bus. Smart money's already gone. So nothing's going to drive down this price past this region. Okay, there's not enough retailers. So now look at the price and how it bounces. Okay, so now you get it is a sharp on the way down, but slow and steady on the way up. Okay, that's like when it's like when you when a store, it slashes its prices for like a big sale, and everyone rushes in, okay, and grabs these cheap items, but then the store, it slowly raises the prices again just to get more people to buy before cutting the prices again later. So when they're all, oh my gosh, they got excited about coming in, FOMOing into the store, buying all these cheap things, and before they can buy, guess what they did? They raised the prices. Yes, they raised the prices, and that's what this is. So before then, they cut the prices again. So don't confuse the slow bounce here for a real comeback. Is what I say. It's mostly just it's trapping buyers. And that's exactly what it is. This traps sellers. This trap buyers because it's going to come down. Trap buyers. People thought it was going to go up, so they bought. So that's all it is. It's the buyers thought it was going to be bullish. So the smart money they're using those buyers as exit liquidity to keep selling down. Okay, the smart money is working both sides, and until price pushes back above right here, it's the path is still down no matter what. So it can sit in a range for 5 months. It doesn't matter. It's still going down. Okay, so that's the current situation on Bitcoin. You see it. I saw it on Ethereum as well yesterday. But I mean, this right here. I mean, I get in and I'll work it. I'll just work this bit right here. This is mine because I have a method to determine exactly when it's going to happen, exactly what time it's going to happen, within 3 minutes, and exactly what the conditions are that it's going to happen in. So it's definitely valuable, definitely been profitable. So. And it's only the move is only usually like 30 seconds, a minute, 2 minutes, so it's very good. All right, guys, I just want to come on and explain it to you guys because a lot of people have trouble when the price starts retracing, and this is anytime. This is on the 1 minute. That's how you tell on the 1 minute as well. Okay, all right. Stay sharp.